Hello, my name is Chris Kapches. I'm the president of Chestnut Park Real Estate. I'm here to comment on the March market results for the Toronto and Greater Toronto area. The overall numbers, if you look at them compared to last year, would seem to indicate that the Toronto marketplace is starting to falter. We have the sales down by about 40% compared to last year. Active listings are up by over 100%, and our average sale price has declined by 14%. Those numbers, I think, are not an accurate reflection of what is happening in the marketplace, and in particular in the 416 region of the Toronto and area marketplace. If we were to drill a little deeper to those numbers, what we do discover is that, in fact, we see the marketplace, and again, specifically in the 416, as being extremely resilient. Average sale prices have gone up in January, average sale prices have gone up in February, and average sale prices went up again in March. So the average sale price came in at $784,000 in March, up 7% from what it was in January. And I think the reason for that is that the underlying factors in the Toronto area, low unemployment, a pretty resilient economy, mortgage money that's still relatively inexpensive, are all in place. And as a result of that, buyer demand remains high. Unfortunately, what we don't have is supply. So these numbers that I've just mentioned, for the most part, are driven by supply, particularly in the 416 area. The bulk of the supply that's out there, the 100% greater supply compared to last year, is actually located in the 905 region, where the bulk of the housing types are detached homes, which, because of price, haven't been selling the way they did last year. They've just gotten a little too expensive. 75% or more of the available listings that I just mentioned are actually in the 905. What we have in the 416 is an insufficient supply, and as a result of that, we're seeing multiple offers, we're seeing average sale prices go up, and we're seeing properties being sold on average for substantially more than their asking price. In some areas, particularly in the eastern areas of Toronto, we're seeing average sale prices of 113, 114, 115% over the asking price. Again, the problem is supply. The Ontario Fair Housing Plan legislation was designed to prevent what people believed, at least the government believed, was foreign speculation in Ontario. That, in fact, was not the case. Recent studies have demonstrated that at most 5% of all purchasers were by foreign buyers last year. That number, of course, has dropped as a result of the legislation. So the foreign buyer component of our marketplace is very small. The real issue is supply. So unless provincial governments and our municipal government do and take measures to increase supply, the situation that I've just described is going to continue. Supply will be very tight, and buyers will find it very difficult to find what they're looking for, and when they do, will oftentimes bid that price up to levels that are starting to resemble what we saw a year ago. Unfortunately, they have no other choice because our rental supply is extremely low as well. And that's another topic for discussion, which I will probably prepare for next week. So again, very strong, very resilient market, particularly in the 416. And again, unless supply increases, expect multiple offers on particularly properties that are in desirable neighborhoods, desirable properties. Multiple offers on condominium apartments, which are slowly but surely being absorbed to the point where there might not be many condominium apartments available for buyers going forward. So some issues that we have in our marketplace, and hopefully through more supply, we can see those being eliminated. So that's the market as we see it in Toronto at the end of March. Thank you.